Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within financial documents. And today we are diving deep into a company that is trying to make a serious impact in the renewable energy space, XCF Global Incorporated. They recently filed an amended registration statement, and let me tell you, there are some juicy details in here. Before we start, if you love getting straight insider insights from these sometimes dense SEC filings, smash that subscribe button. We also have a fantastic and growing community on Discord linked in the description below, so I highly encourage you to come join the conversation. So what is the story today? XCF is essentially looking to raise capital through an equity line of credit, and they are registering a whole bunch of shares for resale by one of their major stockholders, Helena Global Investment Opportunities Limited. But it is not just about the money, it is about the story of a company betting big on sustainable aviation fuel, or SAF, and the challenges they are facing to get there. This filing is from late 2025, and it paints a picture of a company in a crucial growth phase. They've completed a significant business combination and are now focused on operationalizing their renewable fuel facilities. The core of their business is SAF, a cleaner alternative to traditional jet fuel, and they are aiming to be a major player in this rapidly expanding market. But as you know, in the world of complex finance and ambitious growth, there are always risks and uncertainties, and this report lays them all out. First up, let's cut to the chase, the financials. It is a bit of a mixed bag here, as you'd expect with a company at this stage. Looking at their unaudited, condensed, consolidated balance sheet as of the 30th of September 2025, we see total assets around $411 million. That sounds substantial, but a closer look shows that a significant portion is tied up in property, plant, and equipment likely related to their facility construction and development. Meanwhile, their current liabilities are quite high, sitting at about $231 million. This creates a working capital deficit of roughly $236 million, which is a pretty big red flag signaling they are using short-term funds to cover long-term needs. Now for revenues, they reported $16.1 million for the 9 months ending the 30th of September 2025. That is a number to watch, but remember, this is coming from renewable diesel sales, not their primary focus SAF yet. They are still ramping up their SAF production facilities and have experienced production issues. This means their revenues are heavily dependent on renewable diesel and environmental credits for now. And what about the cost of getting those revenues? Their cost of sales also took a jump to about $14 million for the same 9-month period in 2025. This highlights the direct costs of production and feedstock, which are crucial for their profitability margins. With costs running high and SAF production still in its early stages, it is no surprise that they're reporting a loss from operations. For the 9 months ending the 30th of September 2025, that loss was around $48.9 million. That is a significant number and underscores why they are looking to raise more capital. But here is where things get really interesting and where we need to focus. A massive part of their reported net income is due to changes in the fair value of certain financial instruments. For the 9 months ending the 30th of September 2025, they reported a gain of over $206 million from changes in the fair value of warrants. This is not operational profit. This is a mark-to-market adjustment on liabilities related to warrants from their business combination. While it boosts the bottom line, it is crucial to remember this is not cash generated from selling SAF. It is an accounting entry that can fluctuate significantly. Now let's talk about the risks, and this filing has page after page of them. It is clear XCF Global is operating in a high-stakes industry with significant hurdles. One of the biggest risks they highlight is their funding situation. They explicitly state they have not obtained sufficient funding to execute their business plan and will need to raise substantial additional funding. This is a critical and recurring theme, and it points to the ongoing challenge of securing capital to build and scale their operations. It also raises substantial doubt about their ability to continue as a going concern. Furthermore, their new Rise Reno facility, a key asset, has recently been converted to SAF production and has experienced production issues in both SAF and renewable diesel. They expect SAF production to resume as early as the first quarter of 2026, but there is no guarantee. Any delays or inability to reach full capacity will directly impact their revenues and profitability. Another major concern involves disputes with their new Rise Reno facility's landlord and primary lender. If these disputes aren't resolved, they could lead to significant disruptions, potentially even a temporary or permanent cessation of operations at their flagship facility. This is a serious operational risk that could derail their entire strategy. Something quite notable is their admission that their management team has limited experience in constructing SA facilities and limited experience overall in renewable fuels. They are relying heavily on third-party service providers, including a company controlled by their largest stockholder, for critical tasks. This reliance on external expertise, and particularly on related parties, raises questions about control and potentially conflicts of interest. Digging into their liquidity and capital resources reveals a precarious situation. As of the 30th of September 2025, they had a working capital deficit of over $236 million, and cash on hand, excluding restricted cash, totaled only $879,000. They admit that cash on hand will not be adequate for obligations in the ordinary course of business over the next 12 months. This is why they need that equity line of credit from Helena Global Investment Opportunities, ILTD, to the tune of $50 million. However, they also note that 50% of any net proceeds from sales under this ALOC agreement must go towards repaying other institutional lenders first. So the actual cash available for operations and development might be significantly less than the headline numbers suggest. Looking at their path to this point, it is a complex story of mergers and acquisitions. XCF Global Inc., formerly Focus Impact BH3. Nuco Inc. completed a business combination with XCF Global Capital Inc. Legacy XCF on the 6th of June 2025. Legacy XCF was focused on renewable energy assets and CF production. They also acquired New Rise AF and New Rise Renewables in early 2025. This means the historical financials we're looking at are for companies prior to these combinations, and then pro forma financials attempt to show what the combined entity might look like. Their growth strategy is ambitious. They plan to operate and develop 4 projects for SAF production, with New Rise Reno on track to achieve commercial production as early as the first quarter of 2026. They're also building New Rise Reno 2, expected online in 2028, and evaluating dormant biodiesel plants in Florida and North Carolina for SAF conversion. The total anticipated yearly ASAF production output is projected to be 80 million gallons by the end of 2028. These projections are highly dependent on securing funding and managing feedstock supply chains, which are significant risks, as we've discussed. In terms of competition, XCF is going up against traditional refiners diversifying into renewables and other technology. Driven SAF companies, they see themselves as an early mover with a unique focus on SAF. However, the market is developing fast, and they face competition from established players like Gevo Montana Renewables and Neste. Now about Helena Global Investment Opportunities Limited, or Helena, the selling stockholder. They are the ones who may offer up to 72.4 million shares of common stock. It is important to note that XCF Global Inc. is not selling any securities and will not receive any proceeds from Helena's resale. Helena may have acquired some of these shares at prices substantially below current market prices, so they might have an incentive to sell. The registration of these shares also adds a significant overhang risk, potentially increasing volatility or impacting the stock price. So what can we conclude about XCF Global Incorporated? Well, their vision for SAF is certainly commendable, and the market opportunity is undeniable with strong government support and increasing demand from airlines. They have a clear strategy for growth through facility development and international partnerships. However, the financial picture is currently challenging. They are heavily reliant on external financing. Future funding is uncertain, and they openly admit to significant operational and management experience gaps. The ongoing disputes with their landlord and lender at the Reno facility are particularly concerning and could significantly impact their near to medium-term operations. The reliance on the ALOC agreement for essential funding, while also having to allocate 50% of those proceeds to debt repayment, means available cash for core operations might be tighter than it appears. Additionally, the substantial amount of shares being registered for resale by Helena adds considerable uncertainty to the stock price. XCF is a high-risk, high-reward play. Their success hinges on their ability to navigate these significant financial and operational challenges, secure the necessary capital, resolve legal disputes, and most importantly, successfully ramp up SAF production while managing their costs. The story is still unfolding, but from these numbers and disclosures, it is clear they have a long road ahead. Alright, that is our deep dive into XCF Global Incorporated's latest filing. What are your thoughts on their strategy and their chances of success? Let me know in the comments below. If you found this breakdown valuable, hit that like button and subscribe for more corporate financial dissections. And remember to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next decode.